Uber Technologies was actually down over 60% at the midway point of 2022, but we've actually seen a 53% increase in the stock price since putting in those lows, putting them at a market cap of 68 billion US dollars, and of course an undefined PE, of course, because the stock is still not yet profitable. So now that the stock has priced in this lower high, and now that they've reported their Q4 earnings numbers, it's now time to make an analysis on this business here to figure out whether Uber is a speculative buy, sell, or hold at these levels. So make sure to stick around as we'll answer all of your questions and more on today's episode. How's it going? Welcome to Everything Investing. As always, we will walk you through the fundamentals of this business. We'll use that in conjunction with the trajectory of this business to make an evaluation with our intrinsic value calculator. By the end of the video, we'll have an investment rating for you as well. So if you do like this type of content, make sure to smash that like button and subscribe as we post on here regularly. And also make sure to comment your thoughts in the comment section below. With all that out of the way, let's jump into the video. All right, Uber's Q4 2022 results. Let's talk about it here. They came in and beat analyst expectations, not only on bottom line, but also on top line as well. Revenues increased 50% on a year-over-year basis. Those are some strong numbers here, so let's break that down a little further. As you can see from their highlights from this year, they really focused on that membership, their Uber One membership that is. They nearly doubled their users in 2022 to 12 million now, and they're looking to expand this internationally as well. Their monthly active users are now hitting all-time highs as well, all the while hitting new benchmarks for their advertising segment that they're trying to ramp up, seeing revenue run rates of more than $500 million. We'll talk about that more in just a second. Now, when you look at this chart here from Main Street Financial Data, the first link in the description, and an amazing investment resource for us value investors to use to break down key investing data. We can see the trips for Uber has been increasing, ever since that low in 2020, it's just been staircasing higher and higher. And now again, we're at all-time highs as of Q4 of 2022. Great sign for investors to see, especially with a business here that is struggling a little bit with profitability. But that does lead us over to our new all-time high in terms of monthly active customers. That's also been staircasing as a result of those trips increasing. And so when we look at this from a segment perspective, their mobility segment here will naturally see gross bookings increasing. You can look down here at these year-over-year increases, very strong numbers there. Revenue has naturally increased as a result of those higher trips, higher active customers, and the same thing with their adjusted EBITDA. That's naturally going to translate over well to their delivery highlights as well, with gross bookings increasing, revenues increasing, and earnings increasing. Now, the one segment here that hasn't really done as well is their freight segment, the newer segment of theirs. They're trying to build this business up. It is a little bit of a difficulty here with a very niche market here, but they are growing pretty well on a year-over-year basis. It's just over this year, they didn't do so well, in terms of a continuation basis, right? Because we started at highs in Q1 and then slowly for the rest of the year dropped off. So you're going to want to see how Q1 of 2023 plays out. Are we going to see that sizable increase in the Q1 again and then see a taper off? Are we going to see that kind of cyclicality with this business? Are we going to see lower prices? Are we going to build from here? Well, that's kind of what you want to see with that business there. And naturally that translated negatively over to their earnings. As you can see, not a profitable segment for them. But with that being said, let's jump over here to our statement of income here. If we look at this from a yearly perspective, $17.5 billion in revenues last year, now up to $32 billion. That again, massive increase there on their top line as they build up their revenues, which is what they had set out to do. The thing is though, once you add in all these costs here, look at this here, cost of revenues here, $9 billion last year, now up to $20 billion this year. So you're seeing those have increased. And if you add up all the other expenses that they have here on this income statement, they've either been growing or stable from last year's results. Ultimately, $21 billion last year in expenses to $33 billion. Naturally, that is going to have a negative impact on your fundamentals here when you only have $31 billion in revenues on $33 billion in expenses. Now, that is still an improvement on last year's results. Last year, we had $4 billion loss at this point from operations. Now we're at a $1.8 billion loss. And this is really what's going to be important for Uber going into the future and for investors. Can they start to improve on these fundamentals and shift into profitability? If they can, the stock will skyrocket from these levels. And again, using this Main Street chart, you're able to see how they were able to transition from that negative period up into that positive growth period over the last few years. Now, revenues were just sitting at around $8 billion. Their costs, they've actually been managing these pretty well. If you look at these over the last few years, they've actually been relatively stable. So what exactly does that mean for Uber? Well, if they can maintain their costs going forward and they see higher levels of revenues, you're going to see that profitability come through on the bottom line there. Now, in terms of a balance sheet and liquidity perspective, let's just call it about $5 billion worth of cash on that balance sheet, especially when we look at their long-term debt. We have about $9 billion of debt, so definitely a net debt position for this business, but they do about this much in sales on a quarterly basis. So it's one of those ones where Uber's obviously a speculative investment at this point. You're going to want to see how they manage their debt and if they're able to build up on their cash. Now, that being said, if we take a look at their free cash flow positions here, net cash provided by operating activities for this full year of 2022 positive is actually $642 million. If you look back historically, they've been struggling with negative results, but they've actually turned 2022 into a positive year, spent only $250 million on capital expenditures to maintain and sustain the business as well as grow it. And so they actually have a free cash flow position of, let's just call it $400 million. What do they really do with that though? Well, I can tell you not much. They're really just servicing the debt that they do have while also diluting shareholders just a little bit. Now, if you look at this from an operating income perspective, you can see again, not able to reach that profitability line here. And they had a sharp decline in 2019. They have been able to recoup that. And so now as of 2022, $1.8 billion in loss of operations. So although it's negative results, still an improvement on last year's results. We're going to want to see again how they can shift to profitability and then expand on that into the future. And obviously that is their approach here. They're actually expecting that by the end of 2023, they're probably going to have some operating profitability. All right, and if we look at this graphic here, you can see how they've been trying to work down these operating expenses, really shrinking sales and marketing, research and development, general and admin there, which is going to have that opposite effect here and actually benefit the fundamentals here with lower levels of operating losses, higher levels of operating margin, and effectively the goal is obviously to get them into a profitable standpoint. Look out for that in 2023. Now, if we plug a figure like $1.5 billion worth of operating income into our calculator here, assuming Uber can actually reach profitability over the next few years, and if we require a 10% return, they do not pay a dividend, and we only expect them to grow at about 6% into the future on a 45 PE eventually, the stock would actually only be worth about $25 per share. Now, obviously a speculative investment here, you're going to want to see higher levels of growth. They have been able to achieve that in the past here. And so if we can only expect here about 18% growth into the next 5 years, then that stabilizes out at a more firm 10% for the 5-10 years after that on a 55 PE, the stock would actually be trading at about $60 per share, just about a double from where we are currently. Now, in the very worst case scenario, again, more competition, they're not able to control their expenses, things like that. You only see a 0% growth rate into the future. Eventually, they're able to ramp that up to about 8% on just a 35 PE though, then that would send the stock down to about $15 per share. At least that would be the margin of safety level here. So about 50% off from where we are currently. Now, if you wanted to compare this amongst competitors, we have competitors like Lyft, Grab Holdings, across the board, none of them are profitable, especially when you look at this from a PE perspective, still in the negatives there. Now, the last thing I want to show you here is the market cap. You can see Uber's market cap is a balloon compared to the rest at just $6 and $13 billion a piece. The branding for Uber is priced in. It's definitely a bigger business. They're trying to add new segments on so that they can grow as well as bring on loyalty memberships, things like that. So understand the growth prospects there with Uber and the reason why it is weighted the way that it is in terms of market cap. Altogether though, when we do look at this from a technical perspective here with regards to Uber, it seems like $20 per share or so is the level that the stock likes to bounce at, does not like to go lower, and we have priced in a new higher low since bouncing off those levels. So this may be the point where the stock is going to start turning higher. Altogether though, if we're looking at this from an investment point of view, you're going to want to see how they can transition in the year of 2023. Can they shift to profitability like they mentioned, or will they struggle with their expenses and growth prospects? With all that in mind, I'm going to give this business a 6 out of 10. The reason, of course, obviously not profitable yet, and so you're buying a business that is bleeding cash, but they definitely can achieve profitability over the next few years. Additionally, it is a little bit expensive, especially when you take into consideration their similar competitors, but I do think Uber, at least at this point, is probably the best option out of the three that we mentioned. But that's the analysis for today's video. If you did enjoy it to this point, make sure to leave a like, subscribe, and also make sure to leave your thoughts in the comment section below. With all that, I'll catch you on the next one.